This is Bloomberg Businessweek Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. Bloomberg Businessweek Daily with Carol Masser and Tim Stenivek, live on Bloomberg Radio, television, and Bloomberg Originals.
And a very good afternoon, everybody. Yes, indeed, across Bloomberg platforms. It is Bloomberg Businessweek Daily on this Tuesday, July 28th, 2026. There is a lot going on. We think it is the right thing to do, though, an honorable thing to just take you, though, to the nation's capital right now. Of course, there is a service getting ready to be underway at the Washington National Cathedral. A live shot right now. For those listening on radio, we are showing Vice President J.D. Vance, the President, of course, Donald Trump, members of his cabinet, Secretary of State Marco Rubio is there as well, obviously gathered there. There are some leaders in town as well. Prime Minister Benjamin Netanyahu of Israel is said to be planning to attend. So we will obviously keep a watch on this event and, of course, bring you anything that needs to be brought to your attention.
Yeah, big topic of conversation about the life and legacy of the late senator has been his support as a hawk for some of the international conflicts that the U.S. is currently involved in, his support for the state of Israel, his support for Ukraine, and his support for those wars at a time when in the past couple of years, there have been pressure on Republicans, especially when it comes to the war in Ukraine, not to support the Ukrainian government to the same extent it had been supported.
A lot of big issues, and you wonder who spearheads them going forward. Nonetheless, again, President Trump there and Vice President J.D. Vance at the Washington National Cathedral. All right, folks, we do want to get you, though, to some of the things that we are also focused on this Tuesday, and that is, of course, the Fed meeting getting underway also in the nation's capital. A decision is expected tomorrow. Treasury yields are also down in today's session. This as the U.S. pause strikes in Iran and oil prices fell, playing into, again, that backdrop you were just talking about when it comes to Senator Lindsey Graham there, of course, a service in honor of him.
On the equity side, too, we're watching what's going on with Apple. Shares of Apple were higher earlier, in fact, becoming the second company to hit the $5 trillion mark. We saw a bit of a sell-off in semis earlier today. We saw the Korean cost be down more than 10% overnight. And yeah, continued pressure. It's kind of the same story over again. I do feel that. I think our Mandeep Singh is going to be like, again, guys, I've talked to you about this. We're going to get into that. We're also going to talk a little bit about what we got on the terminal, among the most read, Citadel Securities, talking about a Fed rate hike, unexpectedly perhaps, from the FOMC tomorrow. So we're going to get into that. We're also going to talk about building out the space infrastructure. Got a great guest on that, the CEO of Nebex. And then we're going to get into a little bit of a sports, because, yeah, the World Cup is over, but FIFA's thinking about money and the next go-round. Popularity into raising some money, and it's pretty controversial. So we'll speak to a couple of folks about that. Randall Williams, Bloomberg News senior reporter, joining us. Also, Vanessa Perdomo-Maglione joining us, too, a little later.
Hey, before we check on markets, something we want to do, bring to your attention, a new feature exclusively for Bloomberg.com subscribers and terminal clients. We'd love to have you participate in our wall-to-wall coverage of some big tech earnings tomorrow. We're talking about Meta Platforms, Qualcomm, and also Microsoft that we're getting. Easy to do. All you have to do is submit questions for our team of analysts and experts to answer live on air. Just head to Bloomberg.com/askradio to send in your questions. Again, exclusive to Bloomberg.com subscribers and terminal clients. Bloomberg.com/askradio, and then just listen to us.
Yeah, check out Bloomberg Radio. You can watch on Bloomberg Originals. You can watch on YouTube. That's starting 4 p.m. Eastern time tomorrow, with the earnings palooza kicking off, yes, on a Fed day.
We want you to be part of the conversation, so we're looking forward to you sending us in some questions. Hey, let's get to, though, the market trade on this Tuesday. A lot going on. For a wrap-up of what you need to know, here's Charlie Pellett.
Hi, thank you very much indeed. I think you guys correctly identified all four major themes for markets. The semiconductor sell-off, we've got the price of oil slumping, and also tech earnings, and, of course, the Fed this time tomorrow. We'll find out what they do, and we'll be looking forward to the news conference. Kevin Warsh's news conference, his second, coming up 2:30 p.m. Wall Street time. All of that tomorrow. Right to the numbers. We're looking at gains on the S&P 500 index. Interesting day because we started out way lower with the S&P down 30 points, down 0.4%. Right now, looking at a gain of 0.3%. So the S&P up 21, now at 74.34. And the Dow Jones Industrial Average up 594 points, up 1.1%. Sherwin-Williams lifting the Dow today. Meanwhile, the NASDAQ Composite Index down 31, drop there of 0.1%. Weakness in semis. The NASDAQ 100 down 0.8%. The SOX, the Philadelphia Stock Exchange Semiconductor Index, down now by 4.4%. All of this with the VIX holding above 18, the 2-year 4.27%, the 10-year 4.60%, and the 30-year 5.09%. Gold, spot gold down 1.1%, $4,029 the ounce. Crude holding below 80, WTI 79.15 a barrel, down 4.2%. Barrel of Brent 84.15, drop there of 4.8%. Among some of the chip makers today, looking at Micron down 8.9%, Intel down 5.4%, AMD lower by 7.5%. Nvidia, though, bucking the trend, it is up by 0.3%. Carol and Tim, that's a Bloomberg Business Flash.
All right. Thank you so much, Charlie Pellett. Hey, two big things I think it's safe to say that investors care a lot about, and that is what we get from the Fed tomorrow and then also the AI trade. We're going to start, though, with tomorrow's Fed decision.
Yeah, I saw this story and I was like, what? And sent it to the whole team. Citadel Securities expects that the Fed will raise interest rates this week. A surprise move, strengthening Chairman Kevin Warsh's credibility in the battle with inflation. Traders, though, Carol, still pricing an unusually high amount of uncertainty about a potential hike this month. Overnight indexed swaps implying an almost 40% chance of a 0.25 percentage point rate increase this week.
Yeah, we'll see what happens, right? 24 hours from now, we will know. Here with what the economy maybe deserves or needs when it comes to Fed actions, we want to bring in Bloomberg TV and Radio International Economics and Policy Correspondent. He is Michael McKee, and he is in the Bloomberg News Washington, D.C. bureau. Mike.
His second home.
It is your second home. Whether you like it or not, it is. Hey, U.S. consumer confidence fell in July. Americans' views about current business conditions in the labor market deteriorating. So let's just start first with how the U.S. economy is doing. How is it?
The U.S. economy is doing quite well, considering everything that we've been through. When you start adding up all the shocks to the economy, we have seen the growth hang in there. It's a little bit lower this quarter, but it has been 2% or a little bit better for a while. We're looking at inflation that in the last month came down, and we can get into that more in terms of what the Fed is going to do. But overall, business spending is still very strong, and consumer spending is hanging in there, a little volatile, but hanging in there. So when you think about everything that has happened over the last couple of years, and even go back to COVID, it is amazing that the U.S. economy is as dynamic as it is.
Why is that? So many. I mean, I'm not going to say so many things didn't turn out the way we thought they would, but
pixie dust.
I don't know. Is that what it is? I mean, what is unique about the U.S. economy or the makeup of the U.S. economy that makes it so resilient?
We don't exactly know. I was just speaking with Raphael Bostic, the former Atlanta Fed president, who said that's one of the things that keeps him up. He says he worries that can't continue, but he can't figure out exactly why it's happening, so he can't find ways that it's going to go wrong. Obviously, as long as we are spending a lot of money on building out AI, you're going to have that business spending there. The question is, what happens when the building is done and the AI companies have to show profits? Can they do that? If not, then what happens to the stock market? Then what happens to consumer spending if stocks go way down? And then at some point, does the war start to influence consumer behavior and people get concerned? And that could be through the inflation channel or just overall in the consumer sentiment numbers that we're seeing.
Hey, Mike, Citadel, as we mentioned, expects the Fed to raise rates tomorrow in a surprise move, so strengthening Kevin Warsh's credibility in the battle with inflation. So how often do new Fed chairs kind of come in, want to take some kind of an action to show that they are in charge when it comes to labor and inflation, or just in general early in on their tenure? And is it important for them to do something to say, I'm in control, I've got this kind of thing?
Well, there's a certain amount of importance to saying something like that, or at least making that impression. I don't think any of the previous Fed chairs would say, I came in and I raised rates because it was important to show that I have credibility, but it is a historical fact that Paul Volcker raised rates 2 months into his term, and Ben Bernanke and Jay Powell raised rates a month into their term, Alan Greenspan as well. So it's, except for Janet Yellen, who inherited rates already at zero, there's been a tradition of very early rate moves by Fed chairs. As a matter of fact, the story is that when Alan Greenspan first raised rates, which was at his second meeting, Paul Volcker sent him a note that said, "Congratulations, you're a real central banker now."
So the question is, does Kevin Warsh become a real central banker tomorrow, like Citadel Securities expects?
It's a really open question. I mean, all meetings are live, as any Fed official will tell you, but this one's perhaps more alive than others because there is an inflation problem out there, and we don't know where we're going with this. We've seen oil prices come back down again after shooting up again. What does the Fed do? Look through it or think that this could devolve into a further inflation problem? And at the same time, you have Kevin Warsh, who is new on the job, but has made it clear that inflation is the enemy number one and needs to be slain. There's also an angle that some people have pointed out that if you if you raise the short rate, then that eases some fears about inflation getting out of control or being around for too long, and long rates come down, which would bring mortgage rates down. And that would, in theory, make the president happy and take that off the table. So there are a lot of moving parts here. And somebody asked me today, hold or hike? And I said, yes.
Good answer.
Well done, well done. As always, Mike, we're looking forward to your coverage tomorrow on the Fed decision. Bloomberg TV and Radio International Economics and Policy Correspondent, of course, Michael McKee. We mentioned at the top a couple things certainly on our mind. We've been watching the NASDAQ 100 trading near a correction as the sell-off in semiconductor stocks kind of turn a little bit ugly, with investors once again questioning the amount of money that big tech is spending when it comes to AI. And we want to go now to tech.
Yeah, I'm looking at shares of Micron right now, down more than 9% just in today's trade. SanDisk also under pressure. I want to bring in Mandeep Singh. He's our third anchor of Business Week Daily.
My husband yesterday said, "Where's Mandeep?" He did. He talked to me last night. He's like, "Where's Mandeep?" all right, I get it.
The people need their Mandeep.
They do.
My dad says the same thing too, by the way. Mandeep is Global Head of Technology Research at Bloomberg Intelligence. The semiconductor trade, got a note from Tom Thornton earlier today. He says he closed out, what did he say? He just said, "I covered most of my semi-shorts today, as well as Tesla." The shorts are doing pretty well if they shorted at the right time when it comes to some of these memory names.
They are, but when you look at the overall SOX index, it's up more than 100% in the past 3 months. So, when you have moves like this, there's always, points where you will see some consolidation, some sideways movement. And fundamentally, when you look at the earnings that have come so far, and we'll learn a lot more this week, Alphabet pointed to the fact that they're raising the capex. So it's a positive overall for the semiconductor complex. And everyone's, has talked about how they are supply constrained. So to me, nothing has changed fundamentally. But, the market is always looking ahead. They are sniffing for what could go wrong down the line. And that's what you see.
I have to say, Mandeep, prepping for this, I think we were like, oh, shoot. Mandeep's going to be like, guys, I've answered this question a million times. So when do you, what would...
Maybe tomorrow we'll answer it differently after we hear from other companies, or Thursday too.
Yeah, if there's a capex cut, yes.
Well, that's, what would possibly say to you, okay, now there is a problem? Is it...
Even if the companies that are reporting don't raise their capex, to me, that's a negative. Because as I've explained this before, that because of the memory price increases, every company has to raise their capex targets just to account for how much the memory prices have gone up. So if they're not raising their capex, that's a sign they're cutting somewhere else. And to me, that in itself is a negative indicator that, they're holding themselves back. Why is that? Is it because they're not able to train the latest model, or there is something more to it?
Which company do you think will be the first to either hold or cut?
I mean, Meta to me looks like the one where they don't still have a cloud model, although the indications are they are going that route.
Yeah, we reported that a few weeks ago.
Yes, and so if they come out and say they already have a customer, they're looking for Anthropic to use their compute, that's a positive sign. I expect them to raise the CapEx for sure in that scenario. And also, there'll be more details around their own model, the Muse model, because with all this open weight news this week and Jensen Huang, coming on X and supporting open weights, it feels like there's a lot of momentum that suddenly there is behind the Chinese open source models. And what that would mean for the overall ecosystem, I think we still have to discern that overall impact.
So the AI circular fears, or circular financing fears, is that legit? Should we be a little concerned about that every time we bring up that diagram and see how interconnected things are?
I think, there is no denying the fact that Nvidia, with their big balance sheet, is backstopping a lot of this build out. And look, OpenAI doesn't have a balance sheet like Alphabet or Microsoft does. So if OpenAI and Anthropic want to build their own data centers, they need either the hyperscale support or they need Nvidia's support to say, okay, even though you are buying chips from us, I'm backstopping the use. If nobody is there to consume their LLM capacity, I'm going to backstop that.
Why don't they just tap credit markets or investors to do that? Why do they have to have it?
I mean, the cost of capital for OpenAI would be way more than what Google is paying, which is more like 10%.
Okay.
And the return that Google has to earn is more like 20% in order to say it's a good investment. For an OpenAI, if the bar will be much higher, and so that's why the cost of capital matters here.
Okay. Interesting.
I'm just looking at shares of Micron down about 30% going back to June 25th. So
how much is it up?
In a month. Over that time, it's down.
How much is it up this year?
Over this year, it's up 185%. But the thing is like it's starting to look like the same shape that we saw pre-COVID, going into COVID, and then post-COVID, where things revert to normal.
I mean, the big risk factor, again, with all these investments, there's always one big risk factor. And in the case of memory names, I feel it's Apple, because Apple has so much weight when it comes to consumer devices. And if they are able to qualify a CXMT or one of the Chinese providers, then that's a big threat to all these memory players, because suddenly you have got a fourth provider, and then you have got the largest consumer hardware company looking to use that.
Is that a real threat to the big three?
I think so.
You think so?
What we have learned so far is because there is such a big supply-demand mismatch, that these companies could allocate a lot more of their wafers towards HBM than the conventional DRAM.
High performance computing.
The high bandwidth memory.
That's high bandwidth memory. Thank you. Yeah.
But DRAM is where they're getting all their pricing lifts. So
what does that mean for like the consumer side of things? Apple's saying a few months ago that it's raising prices on this stuff.
Yeah.
That's here to stay.
That is here to stay as long as they are relying on a Micron and SK Hynix for DRAM. Remember, Apple doesn't need HBM, at least right now. They're not building data centers. They need memory chips for their smartphones, and they just need the DRAM. So DRAM is what has gone up in prices, partly because of all the wafers that are needed for HBM. So there are a lot of moving parts to this, but CXMT is a player that sells DRAM, the commoditized
CXMT?
Memory chips.
I was just going to say, we've only got 20 seconds, but increasingly, should we be watching what China's doing very quickly?
Absolutely. On the open weight model side, everyone wrote them off, and suddenly they've got the support of 100 plus companies here in the US saying, we want to support Chinese open weight models.
Wild, wild, wild. Thank you for coming back. I know we asked the same questions, but we need you.
Maybe we'll see you tomorrow.
We will, we hope. Mandeep Singh, Global Head of Technology Research of Bloomberg Intelligence. Coming up, the CEO of Nebex.
It's 2:21 on Wall Street. We do check markets all day long here at Bloomberg. The Dow, the S&P, they are both higher. We've got NASDAQ and the NASDAQ 100 index. We'll throw in the Russell 2000, all in the red. A sell-off in semis is continuing with the SOX, the Philadelphia Stock Exchange Semiconductor Index, down now by 4.6%. The NASDAQ 100 index down 0.9%. NASDAQ Composite down 0.2. But the S&P 500 index reversing earlier losses, holding on to a 17-point gain, now up by about 0.2%. Dow Industrials up 555, up by 1.1%. Sherwin-Williams leading the Dow higher. The Bloomberg Mag 7 index up by 0.8%. This ahead of earnings from 4 of the 7 members coming up tomorrow and Thursday. The VIX above 18 with a 2-year yielding 4.27%, the 10-year 4.60%, and your 30-year 5.09%. Gold at $4,028 the ounce. Spot gold down 1.2%. West Texas Intermediate crude $78.97 a barrel, slumping 4.4%. Barrel of Brent $83.89. Brent crude right now down by 5%. SpaceX shares bouncing back today after temporarily erasing a fifth of their value from the record-setting debut of Elon Musk's company. SpaceX shares right now, you recall, they did go public at $135. SpaceX shares now at $116. SpaceX today up by 2.8%. Recapping, S&P 500 index up 19. That is a gain of 0.3%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcast. I'm Charlie Pellett. Tim and Carol, that's a Bloomberg Business Flash.
All right, Charlie, so appreciate it. Hey, folks, we've been watching shares of rocket, satellite, and space-linked companies. They've been under pressure. Names including Intuitive Machines, Rocket Labs, and Redwire, among those losing some ground today. This is happening as Elon Musk's SpaceX shares have dropped as much as 20% below their initial public offering price of $135 a share, so erasing roughly 1/5 of their value. For those who are watching on YouTube and TV and Bloomberg Originals, you can see just after the first couple of days of trading where the stock shot up, we have been essentially in a downward move here. SpaceX shares, though, I should mention, bouncing around today. They're now up a little bit more than 2%, but they were down a lot earlier in the session.
Joining us on set to talk about building out space infrastructure, Tejpaul Bhatia is back with us, CEO of NEBX. The company describes itself as the market infrastructure platform for the global space economy. Good to have you back on the program. Last time you were with us, you were CEO of Axiom Space. So a little bit of a job, not a little bit, a lot of a job switch, but you're staying in the space.
Yeah.
Okay. All right. Just making sure.
Space. You got me.
$30 million seed investment round led by the company formerly known as Google Ventures, GV. Other top-tier venture funds included a banking relationship with JP Morgan. What are you setting out to do at NEBX that you weren't able to do at Axiom?
Yeah, well, thank you first both for having me back. We met a few times. Always loved our conversations. I feel like I remember vividly your story about your father.
Yeah.
And kind of the general connection we all have for space. Really cool to be hearing you talk about various space stocks and us speaking like it's a real economy. It's not a real economy yet, and it's not a real asset class yet.
Why not?
So SpaceX, by far, this largest IPO, very exciting. It's doing what public stocks do, and they've created a ton of value. A question I would ask is, why is there no remotely close second place? Right? Every other sector, I know the previous guest was talking about AI, right? 20 years ago, it might have been search or cloud or mobile. In every major revolution where there is huge value created, there's multiple massive winners, right? You know, look at the big four, you know, the FANG stocks we used to talk about a while ago. There's always other ones. With
but
space.
The moat to launching a rocket and then landing it on a barge, which, you know, 7 years ago was a big deal, but nowadays happens so frequently we don't even necessarily show it. That's a pretty big moat.
Pretty big moat, absolutely. But again, why is there only one that's been doing it? And I think this is where NEBX comes in. We have a belief that this is a major transformation for industry and civilization. And NEBX is building what we call the commercial rails to go on the physical rails. The physical rails being those rockets that go up and down. And we've seen this over and over again. We've seen it particularly in New York quite a bit. When the railroads were built, New York to California, 3 gentlemen in Buffalo, New York, Butterfield, Wells, and Fargo created American Express to guarantee gold going from New York to California And when they realize that they're guaranteeing it from robbers and gangs like Jesse James, they realize they don't actually have to send the gold. And that was American Express and Traveler's checks. JP Morgan, 1871, standardizes the shipping container. The first letters of credit between global banks guaranteeing trade. So we've seen this time and time again, but in space, everyone has been focused on the hardware. Everyone has been focused on the physical infrastructure. And when we talk about infrastructure, a launch a day is infrastructure. Launching giant rockets and landing on a barge exactly on their X logo, that's incredible infrastructure. Tens of thousands of satellites in orbit, that's infrastructure. Every other company, though, is putting up demos. So we feel there's this wide open space right now for a company to bring the rest of the economy along. Once those rails are set, going up and down, what's the next traveler's check? What's the next shipping container? What's the next trading platform that allows the economy to scale the way every other industry has?
So how do we get there? Because the other thing I would say with space is you want to make sure there aren't problems. It's complicated. It's difficult. I always think about, you mentioned my dad, like he would have been blown away by the idea that you could actually bring a rocket back and make it land, because that's not the case when he was doing it. So I'm just like, there are regulations to make sure things are safe and secure. Lives certainly at stake, and this concept of kind of building out space as a place for people to maybe live or data centers to exist. What does it take in terms of international cooperation among entities, companies, and then the financial entities?
Yeah, and again, we've seen this in other industries, aviation, right? From the Wright brothers to Lindbergh, going from New York again to Paris. We saw within a few years air shows everywhere, right? The wars having multiple air forces, and then within 100 years, that industry completely transforming life. We can't imagine life without airplanes now. The interesting thing about space, and I discovered this, in my previous role, I'm new to the industry. I worked at Google 5 years ago.
Yeah.
And it's been my childhood dream to send astronauts to space. I got my shot, I took it, I was really good at it. Sent 16 astronauts to space, 12 sovereign nations, billions of dollars of revenue, again, all as an outsider. And as special as I believe I am, as special my parents think I am. There's 8 billion.
Thank God for parents.
There are 8 billion special people in the world. Why is nobody else cracking this code? And what I realized is, I think we uncovered right under our nose a gold mine, which is literally the only industry left on the planet that hasn't been touched by modern finance. And there's a geopolitical history behind this. Back in your father's time, the space race, John F. Kennedy, we go to the moon, we do these things not because they're easy, but because they're hard. I think we all get goosebumps when we think about it. That's kind of our origin story, space in the United States. At that exact same time, students in schools were being trained to get under their desks in case there was a nuclear attack. It was an arms race. And there was 2 superpowers, the United States and the Soviet Union. And everything came out of that. And originally, the first collaboration between those 2 space superpowers was what eventually became the International Space Station. And to remove complexity and politics from it, they decided no money will exchange hands. And it worked. And it maintained peace and diplomacy even through the current conflict. But now with a company like SpaceX and Starlink and Starship, we need financial infrastructure to actually modernize the industry.
I want to go back to, and Tej, we only have about like 4 minutes or so left, so I want to kind of get to some of what you actually kind of plan to do in the deals as this platform gets up and running. But I mean, I always believe that if there's money to be made, money will go there. And you started off saying, why aren't there larger competitors to SpaceX?
Yep.
So if the money hasn't gone there already, maybe it hasn't gone there for good reason.
Yep.
And maybe you need to have it concentrated in one hands, or government still being very much controlling a lot of stuff.
Yeah, and I think you've nailed it. I don't think it is a cause and effect. If you follow the dollars, it is a massive market today. I know last time I was here, we were talking about orbital data centers. We've spoken about pharmaceuticals, in-space manufacturing. We saw in SpaceX's IPO the $28 trillion TAM. Awesome.
Yeah.
Awesome. Let's
total
hope that
addressable
happens.
market.
Yeah, total addressable market.
Totally realistic?
Yeah, why not?
Okay.
Why not? But that's vision. We can look at exact numbers in 2026. We can follow the dollars, which is what we all should be doing, and every dollar goes back to a government budget. The beauty of government budgets is they were appropriated 5 years ago. The the beauty of government budgets is all publicly available data. The exact dollar amount that's going to be transacted in 2026 is $138 billion. It's actually $137.4 billion for the weirdos who've checked every single RFP and tender and know where every dollar is going. So we know that that's a massive market now. So there's no guesswork there.
Yeah.
It's all coming from government budgets. So the reason it hasn't actually accelerated is because it's been of sovereign to sovereign business, and now with commercial supply, it's changing.
We're speaking with Tejpaul Bhatia, the CEO of NEBX. So who are your first customers going to be at NEBX?
So NEBX is a financial exchange for cross-border space transactions. When governments need to buy commercial supply from another country, it gets very complicated. And basically, that's every single space transaction. If you want to get off the ground and
Export
you want to
restrictions, there's lots of things that go on.
Exactly. Import, export, ITAR, EAR in the case of the United States, taxes, tariffs, politics,
Right.
policy,
Procurement rules.
For many European countries, money cannot actually leave their borders. And they invoke what they call the barter system. There's no real barter system, but it's usually some sort of value in kind bilateral trade that agencies will do. So there's no trusted counterparty. There's no neutral central clearing settlement system for these deals, which forces every deal to be bilateral and sequential. There's no parallel processing in this. So when companies are going after government contracts, they win the contract, they get their payment, they hit the next milestone.
How do you take the politics out, though, in a world where geopolitics does determine who you sell what to, and especially it's heightened in terms of the sensitivity, whether it's natural resources, whether it's weapons? Like, how do you get around that? And forgive us, we only have about 45 seconds.
I can answer in 15 seconds. So 5 years ago, when I was working at Google, I'd never spoken to a world leader before. Sending 16 astronauts to space, you're dealing with presidents and prime ministers. I don't even pretend to say I understand politics, but we have the most efficient vehicle as humans to solve that, and that's the markets. So capital markets, and you mentioned the relationship with JP Morgan. What's happened is in this time warp that has become space, the space business is stuck in 1969. This building is a couple of $1 billion, right? The bankers who finance this get paid on transaction fees, assets under management. The atomic unit for space is a launch, which is about $100 million. You can't get the time of day of any Wall Street banker to come finance that, even if it's a bankable deal. So doing it at scale, bringing the capital markets in, makes it a money problem, not a politics problem.
We know this will continue, this conversation. Glad to have you back. Come back sooner. Let's not wait a year or so. Tejpaul Bhatia, he is CEO of NEBX, joining us right here in studio. All right, folks, as we head to a break, we do want to take you to the nation's capital, Washington, D.C., and the National Cathedral. President Trump currently giving the eulogy for Senator Lindsey Graham, the service and funeral being heard. As we head to a break, you can follow this. Just head to Live Go. You're listening and watching Bloomberg.
It's 2:40 on Wall Street. We do check markets all day long here at Bloomberg. The Dow higher, the S&P higher, NASDAQ and the NASDAQ 100 index both declining. Bottom line, those stocks are higher, oil is moving lower, and chips are selling off. The SOX, the Philadelphia Stock Exchange Semiconductor Index, now down 4.6%. The NASDAQ 100 index down 0.9%. The NASDAQ Composite Index down 0.2%. S&P keeping it all in context, up 0.2%. Higher now by 17 points, and the Dow is up 560 points on the Dow, a gain there of 1.1%. Dow Industrials getting a lift from earnings from Sherwin-Williams. The Bloomberg Mag 7 index up 0.6%. We will be hearing from 4 out of the 7 members in the next 2 days. Right now, the VIX is just above 18, and a 2-year is yielding 4.27%, while the 10-year is yielding 4.60%. Spot gold down $52 the ounce to $4,023. The precious metal down 1.3%. West Texas Intermediate crude holding below 80, $79.23 a barrel. It is down 4.1%. Barrel of Brent, 84 even, down now by 4.9%. Earnings news: Coca-Cola has raised its full-year outlook, bolstered by demand last quarter, while it served as a major sponsor of the FIFA World Cup. And today we are looking at Coca-Cola shares advancing by 4.4% now. Rival PepsiCo, it is trading higher as well, up by 1.8%. Briefly, United Parcel Service boosted its sales guidance for the year to about $91.2 billion, up from a prior forecast of $89.7 billion. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcast. I'm Charlie Pellett. Carol and Tim, that is a Bloomberg Business Flash.
All right, man, the fans are barely back home. Some of them maybe are still playing around in some of these great cities.
I think the merch is still selling.
It is. I see it in the city. I definitely do.
I saw some Spain jerseys yesterday on my way home.
Did you?
And my daughter is wearing Argentina today.
See?
Yeah.
So it's still around us. I mean, the World Cup is still definitely a newsmaker, no doubt about it. Charlie just talked about Coca-Cola raising its full-year outlook bolstered by demand last quarter, while it served as a major sponsor of the FIFA World Cup.
And then there's this, FIFA working on a plan to raise as much as $4.2 billion from external investors, this according to a person familiar with the matter, as football's governing body opens itself to outside investment for the first time. I not even know
I just
that one
assumed.
could perhaps invest in football's governing body. It's pretty controversial, to be
Are you going
fair.
to sell your crypto and go into it?
I am staying
He doesn't
put
have any
right
crypto.
here.
I don't think he does. I don't know. Well,
No crypto.
With
No
more
crypto.
on all of this and the look at the world of sports, Vanessa Perdomo-Maglione is with us. She is Bloomberg News Business of Sports reporter, sports business reporter, I should say. She's also co-host of the Business of Sports podcast. She's here in studio. And also with us is Randall Williams. He's another co-host of the Business of Sports podcast, and he is Bloomberg News senior reporter. Guys, thank you so much. Randall, you're in D.C. We're going to get to that in just a moment. But I want to get to what's going on here. FIFA pitching to outside investors. Is this a big deal, Vanessa? Give us some context. I think we just kind of assumed outside investors were involved, but I guess not.
Oh, it's really interesting. No, it's a massive deal. And this is
I
just...
assume the opposite.
Oh.
Yeah, I thought it was like a governing body that was supported by its members. And
so
which it is supposed to be.
Yeah.
Right. That's exactly what FIFA is supposed to be. It's a nonprofit. FIFA is a nonprofit. It's a governing body. They're supposed to support their 211 members. And
I'm just so
basically
used to
all of them.
Americanized sports, and there's so much money in
Well,
there.
this is exactly what plays into it, though, Carol, right?
Yeah.
They just had their World Cup in the U.S. Gianni Infantino has a great relationship with President Trump, and one of the investors behind this is Joshua Kushner, who is, closely related to the Trump administration in a way. So it's...
Well, he's the brother of Jared. Let's
He's
just
the
be
brother of
honest.
Jared Kushner, right,
Which is
exactly.
the son-in-law of the president.
Right, exactly. So I think what we're seeing here is right after they have the World Cup in the U.S., they then have this idea to, which they did note beforehand, have been in the works a little bit, but they have this idea to have a for-profit part of FIFA.
I don't know, Randall. Come on in here, because there is some precedent to this.
Money in sports?
With the
How could that
PGA, I
happen?
read, thanks to Giles Turner's story, who covered this earlier today, but it does seem a little strange that you would have outside investment coming into a governing body, especially, when there are some asterisks around what you can then do with that stake of FIFA.
Exactly. I mean, what does Kushner and Thrive get out of this? And what do some of the outside investors get out of this? If this is a for-profit arm and there is a non-profit body, how do those things coincide with each other? And who's getting paid? We don't really understand as far as, where's this money going to go? A lot of times that, private equity and venture firms and funds are investing into teams. They're doing it for a purpose. They're doing it to, help with stadium issues. They're doing it to help with when owners have billionaires and taxes and different things like that. They're helping with things that are alleviating stress for billionaires. This one is sort of like question mark, question mark, question mark. Why is a nonprofit raising billions of dollars?
So what does FIFA say, Randall?
FIFA will tell you that this is for the good of the sport. This is going to enhance football around the globe, and they're looking forward to hosting the 2027 Women's World Cup and the 2030 Men's World Cup.
Okay, that's what FIFA says. UEFA is not so happy about this, Vanessa. Giles Turner, writing on the Bloomberg Terminal just in the last 20 minutes or so, that UEFA is considering a boycott of FIFA events, including the World Cup and the Club World Cup, in response to FIFA's proposals to seek private investment. Do you think, Vanessa, that this could be the type of thing that doesn't happen as a result of pushback?
I think that we have seen pushback like this before on, in certain things, and FIFA has proposed ideas like this, but not this exact idea before, but they have proposed things before that the governing bodies have said no to. I mean, the 211 members associations have to say yes in order for this to happen, right? And then all of these other entities like UEFA and CONCACAF also would probably need to be on board. They're not necessarily the members, so it's different. But I think that UEFA's strong feelings about it could potentially
This is, by the way, the European Football Body.
European Football Association, right? And they came out and said this absolutely crosses the line. No football governing body should be doing this. And we'll see where it lies, but I think that FIFA, they're the ones who came out with this statement, and they're clearly very far along in
Randall,
this
come
discussion.
on in. Yeah.
And I just added, you have to remember, the members that are in Europe. It's not just anybody. It's France, it's England, it's Portugal. It's all of those countries that are considered superpowers and have some of the most popular players in the world. And so this is a Cold War brewing. And we're going to find out in many months and maybe years to come if it's going to boil over. And what is the result? We haven't seen anything quite like this in the global sport of football, probably since the Super League, which was going to combine a bunch of clubs around the world and try to, make the competition as high as it possibly could be. And that evidently was gone away with. And so this is something similar, but at a higher level. Imagine the Justice League versus the Avengers versus you throw another team in there that you all like. And this is what this is in terms of football.
FIFA has said the proposed company, FIFA Forward Enterprise, would remain under its control. Investors permitted to acquire only minority, non-controlling stakes. The venture could raise as much as $4.2 billion. And FIFA has said it could substantially increase development funding for its 211 member association, supporting infrastructure, coaching, grassroots programs, and women's football. Vanessa, do they need the money?
Well, I mean, they just made $15 billion from the 2026 World Cup, so I don't.
Everything was sponsored.
So I don't think that they necessarily need the money, but they'll always say, like you just said there, Carol, they'll always say this is to then support the further, growth of these of the member associations.
They didn't sponsor the hydration breaks, right?
Are you joking?
They sure did. And they got $500 million
that was
from it.
I'm just kidding.
They got $500 million from it. I mean, I think one of the things that we'll see here is how it, next year is the 2027 Women's World Cup, which will have 48 teams again competing with 104 matches, which on the women's side, this investment actually could probably use more investment for these smaller countries.
Okay.
Randall, I heard you jumping in there with some sponsorship commentary.
Yeah, I was just going to say, I do think that if the World Cup is going to expand to eventually to 64 teams, then what could happen is that these early round games matter less. That's going to upset, the nations that are superpowers. That's England, that's France, that's Argentina, that's Brazil, because they do have to play teams that might not have qualified in previous tournaments. And so if FIFA does by their word and they say that this money is going to go to those programs and it's going to develop talent, that we could see global superstars from Cape Verde someday at a younger rate than what we saw this year where the goalkeeper was over 40. And so with that in mind, it sounds good. But the question is, does the world of football trust it? And I'm not so sure about that.
Money in sports.
I love this.
Never thought it would have kind of gone to the level it is here in the U.S., but here we are, right? So
we're the ones who made it that way.
Yeah. Well said, well said. Vanessa Perdomo-Maglione, Bloomberg News sports business reporter, co-host of the Business of Sports podcast, along with Randall Williams, who is also Bloomberg News senior reporter. This is Bloomberg Businessweek.
This is Bloomberg Businessweek Daily with Carol Masser and Tim Stenovec on Bloomberg Radio and Television.
All right, everybody, we are headed to the last hour of trading, getting into it just in a few minutes. We got a lot coming up still on Bloomberg Businessweek Daily. In the meantime, quick update for you on the trade on this Tuesday. Remember, the Fed kicked off its two-day meeting, the FOMC specifically, second meeting chaired by the new incoming Fed chair, Kevin Warsh. We'll get a decision tomorrow. So some interesting chatter, if you will, on the Bloomberg about Citadel saying maybe we'll get that surprise rate increase.
What did Mike McKee
Kevin
say?
Warsh.
He was asked if the Fed would hold or raise rates tomorrow, and Mike replied, yes.
Exactly. It's an interesting time to be. So we'll see what we get, and looking forward to that press conference. In the meantime, on this Tuesday, you are looking at an S&P little change, just up about 22 points. That amounts to about 0.3% higher in percentage terms. Dow's up more than 600 points, up more than 1%. Nasdaq 100, though, Tim, under pressure.
Yeah, what about the chip stocks? Those are under pressure. The stock's down 4.5%. 3 names are higher in there: Nvidia, Qorvo, and Skyworks. Everything else, the other 27 names in the stocks, are lower today. Micron down 9%. ARM Holdings down 8%. AMAT down 8%. And AMD down 8%.
Yeah, some big declines. All right, let's get to some movers. Stocks on the move today. I'm Carol Masser along with Tim Stanovic. With us is Bloomberg TV Markets correspondent Nora Melinda. She's in studio. Let's kick it off with some well-known brands, actually. JetBlue. The stock
a lot
you're
of consumer-facing ones. Ticker JBLU. Now, the stock is higher by about 9.5% right now as we speak. This comes after the company reaffirmed its full-year guidance and essentially said that it will reach positive cash flow next year. Now, this, of course, buoying the stock higher. We did see a lot of strong demand for the company. I'm curious. I don't know if you guys ride or fly JetBlue often. I haven't flown it super often, but
we flew it about a year ago. I can speak for Carol. We flew it a year ago.
East Coast, West Coast trips. Yeah.
Okay, you think of it a bit more as a budget airline?
I've never thought of it
No,
as
it has
a
no
budget.
identity. That's the problem.
Yeah,
That's the challenge.
Right.
It used to be like an upscale budget airline, but
Yeah.
anyway, this is the whole issue with
It's
JetBlue.
exactly as it's trying to
But
kind
they
of.
have a very premium product with Mint.
That's very true. Well, we also did see that, of course, because of the bankruptcy of Spirit Airlines, JetBlue's actually going to be also expanding its operations in New York City at LaGuardia Airport. So they actually did purchase both the takeoff and landing spots at LaGuardia Airport, those that were left over from Spirit. Shares of JetBlue up about 30% so far this year.
You know, it's a $5 stock, $6 stock. It was $21 a share back in early 2021. I'm going to even go back. I mean, I remember when they introduced Mint.
Yeah.
So
how it's fallen.
And they were just such an interesting, they didn't have any legacy, they didn't have old planes, they had new planes, they didn't have kind of any of the legacy metrics and problems in terms of, I think, union. Like it was such a different carrier, giving the chips, endless chips. Like it was just a whole different take. And
but that was 25 years ago.
I know,
and it worked
I know.
And sometimes
Not
you get on one
today.
of those planes now and it looks like the monitor is still from 2006.
Right.
The planes are a little rough.
Yeah.
Yeah. And I still like
Especially for the
I still
price.
like the Mint service. Like I love it. And, we talk about, there's one row where it's just one seat.
There's 2 rows.
There's 2 rows.
Where you have your private cabin.
Have to hop in those.
And it's really kind of a sweet ride. But you're right, Tim. They've lost their personality, like kind of who they are. So, but nonetheless, investors like it today, right?
Well, you said a sweet ride, and speaking of sweet, seems as though consumers are not really liking the sweets and the calories. At least that's what we're hearing from Coca-Cola. So we do see shares of the company higher after it lifted its outlook. Essentially, consumers are interested in its sugar-free sodas. So maybe people not really as interested in some of those high-calorie, super sugary drinks that we, of course, see on commercials all the time. But not only that, we've been talking a lot about the FIFA World Cup. This company getting a boost, of course, being a major sponsor of the FIFA World Cup. And you're seeing that reflected in some of the price action that we're seeing on Wall Street. JP Morgan saying that it is a positive standout when we look at all the mix of some of those consumer staples earnings that we've been getting so far.
Coca-Cola is up 26% year to date. Go figure. Listen, I would argue still one of the best known brands, global brands that are out there. All right. And now we go to Zillow.
Yes, real estate. So we are seeing shares of Zillow higher, ticker ZG. So we saw a federal judge dismiss a lawsuit against Zillow that essentially did claim that it was tricking buyers into working with its partners and also incentivizing agents to steer consumers toward its Zillow home loans. It was able to bypass this overhang, and so you are seeing analysts on Wall Street, some at Jefferies, saying that they think that if they can get a win here, maybe they can win some of these other cases that they're under scrutiny for. But the stock is down about 51% this year.
12% of the float is short too. So there's definitely a lot of negative sentiment on this one. Great names. Really appreciate it. Nora Melinda there with some stocks on the move. She's Bloomberg TV Markets Correspondent. Check out our Stock Movers podcast, 5-minute episodes, big winners and losers. You can find it on Apple, Spotify, or anywhere you get your podcast.
Markets are mixed on this Tuesday afternoon. A Fed Tuesday, as the Fed Open Markets Committee is meeting as we speak. We'll hear from them tomorrow. The S&P down 0.3%, up 0.3%. The NASDAQ down 0.1%.
We're probably having some tea and cookies right now. Little afternoon snack. Just saying. This is Bloomberg.